Welcome to this episode number 90 of your next trade called today Retail All-In. A lot to discuss this week. We saw last weekend, we discussed the dispersion trade when we look at NVIDIA versus the rest of the market. What we saw over the last 5 sessions, actually NVIDIA did pretty well, but we had very different reactions on earnings. We saw as well a pattern that has been the same on Friday and Monday that we're going to be discussing. So a lot to discuss, but I want to start as always. What is the big subject of the week? This is retail traders being all in. So we had 2 or 3 dips, 2 dips. We had the first dip that was 2 weeks ago, which was the DeepSeek Monday, where the market bounced very quickly. On Monday of this week, we had the same pattern where after the tariffs news, the market reacted badly the first thing, but then, we bounced massively. And if you look at how the retail traders have been doing, the retail sentiment has been very, very strong. So we saw volumes on Monday of this week, the Monday before, on Tuesday, any dip is buying massively. And don't get me wrong, what has been happening since 2020 is you have an army of retail traders that have been joining the market, most of the time looking at the market like this is casino. So, the outcome is going to be the same as before and the same as before. You're going to have 90% of them that are going to be losing money. What is most interesting is they are mostly using leverage products, because if you look at where traders have been playing with, it's in the US, from the US. And the difference between the US and the rest of the world is, until not so long ago, there was not that much access to leverage, to the gross exposure. So if you had an account in the US, you were only allowed to be trading if you had $10,000 on your account, you will be allowed to be trading $10,000, at best $20,000 with the 2 times leverage. But what has been happening since 2020 is this massive introduction of options. And with options, you do have leverage, and this leverage is coming back and forth into the market. So similar to the leverage, we are now futures. And if you think about Robinhood, over the last month or so, there has been the introduction of futures for retail traders, for Robinhood traders. So if you think about it, this is really bad news for retail. This is good news for us. Because that means the leverage is been using in full force and could be creating damage. So let's look, as always, we're going to be starting with actually an announcement. So next Saturday, February the 15th, 2 p.m. London, 9 a.m. New York, I will be doing a webinar called Option Trading 101. And this is to avoid those 5 rookie mistakes that you could be doing. I'm pretty sure that it will ring a bell to many of you. Most recently, I've received a lot of messages from people that lost a lot of money trading options. That has been extremely painful. So I try to make it interactive. So I'm going to go through those mistakes, and as well, you'll be able to be asking questions. So what about the year-to-date asset performances? Stocks are still doing okay. We are talking the S&P up 2.5%. As we can see here, the Nasdaq Tech is underperforming. Europe still very strong. We had another week of strong performance in Europe. Banks have been really, really strong. There are hopes that the war in Ukraine will end soon. And as well, Europe being the second derivative of China, there are hopes that China might be doing better in the next few months. What about FX? If we look at FX, we are roughly flattish for the dollar, but the yen has been pretty strong. What we saw as well is some cracks into the crypto space. Ethereum is down 20% something. So if you think about the risky assets, crypto has been one of them, and that's interesting to see some of the cracks. So I want to be looking at this week-to-date asset performance here. As you can see, crypto, Bitcoin down 6%, and Ethereum down 22%. That tells you as I said, that there are cracks in the force, and if you want to see a move going forward, you will have to see positive news on that space, obviously. Stocks were flattish on the week. Same with the dollar, as I said, dollar yen. So yen pretty strong for two reasons. First reason is the US 10 years has been coming down. As we're going to see later, it's now at 4.5%. But as well, there were some talks and very active talks from the Bank of Japan of saying that inflation is in the system now and we should not be worried. So they are trying as much as possible to strengthen the yen a bit. So let's look at the week-to-date industry performance, and I'm interested into the S&P and the Nasdaq first. As you can see, they are right in the middle, and you get the negatives and the positives. So as we covered over the last 2 or 3 weeks, there is a lot of dispersion in the market where the volatility of the index is not moving that much. We are trading in a range of 2 to 3%, but in between, you have stocks, you have industries moving a lot. Right-hand side, you got the gold miners, you got social media. Interestingly, we discussed yesterday in a mentoring program one of these gold miner, pretty interesting case. Other end of the spectrum, you're going to have something that I want to flag. Those are the home builders. So home builders have been very weak over the last couple of weeks. So this is a red flag coming for the US economy, and we should keep an eye on it. So what about the sector's performance? Week-to-date sector performance, you get consumer discretionary that has been struggling. Why? Tesla is under a bit of pressure. So the Tesla retail army has been suffering. We will see very quickly some news from Musk to pump up the story again. But overall, what we see from the year-to-date sector performance is technology, which was the market leader until 3 or 5 months ago, has now been struggling and is not pushing the market much higher. So what are the indexes doing very well? The sectors doing very well. Financials, and that's the same in Europe. You'll see the banks up 20% something. Healthcare, which is the defensive, and telco through Meta. So what about the rates? Rates, we are at 4.5%. As I said, we came down from the 4.8% that we had most recently. The Treasury through Besant has been pretty vocal this week, saying that the politics from Trump is going to be the same, that they want a strong dollar, that they are still targeting the 3 hours of Besant, which is 3% growth, 3% deficit, and 3 million barrels pumping. The first reaction was pretty good on the US 10 years. We went from 4.65 to 4.5%. So market is pretty adamant in this new administration to keep the deficit under a leash. Fed funds rates, I think this one is interesting because as you can see here, we have been moving in December to 1.5 cut of 25 bips. So the Fed being less accommodative going forward. Why? Because the US number have been pretty good. We are talking NFPs yesterday that were more or less in line at 143,000 job creation. So now going into the VIX, we are still into the 15, 17%, 16%. If you remember, that tells you that the S&P should be moving by 1% on any single day. And if you look at what happened yesterday, the S&P went down 0.95%. So more or less what should be the outcome. But what is interesting is we are going into most macro numbers with the implied volatility being smashed. And when the macro data is out, after that, the realized volatility goes out. So that has been a phenomena over the last 6 months. We smashed the volatility going into the event, and then it will go higher. So let's look now at a bit of technical analysis, starting with, as always, with the S&P futures, and I've been flagging over and over, this is the important level, the 6120. on the S&P futures. Yesterday we went at 61.25, but very close to that level. We have been struggling to go much higher. There is not much momentum going into this market, as we're going to see. Nasdaq, same picture, struggling and underperforming the overall market, and I'm talking the S&P, but there is, I mean, you do have like this long trend, don't get me wrong. So this is your very strong trend that started in 2022. As you can see, we're going up and up and up. But over the last couple of months, not much of leaders going forward. So I'm interested into the dollar yen, as I said. So what I strongly advise you, and this is something that I do in the community, if you look at the dollar yen versus the differential of rates between the US and Japan, you will see a strong correlation, but a strong move for the dollar yen, for the yen. I think, this is same as last year. This is a space that we should be looking at. If you remember August 2024, when the market tanked, this was when the yen was really strong. One of the reasons was the end of the carry trade. If you think about positioning, the positioning in FX is very different from last summer. So you're not at the mercy of the same move, but as always, options market and cash are very much driven by what happened in Asia, and when you have an overnight move, that has a repercussion for the rest of the market. I want to be looking at the fabulous 7. So the trend, is still very strong. Okay, so if you start from 2018, you've been making, if you think about it, you've been making 10 times your money being long the fabulous 7. So quite something really big. But as a trader, I'm interested into the different time frames. And as you can see here, most recently, since roughly beginning of December, it has been going nowhere. I know what you're going to say, it's probably something like this, and we should expect, probably that is consolidation to go higher. But so far, not much of outperformance for the overall market. And when your leaders are not leading anymore, guess what? Your market is struggling to find direction. And this is what has been happening. So let's go back into what we had for this week. So let's start, as always, with the S&P futures. Over the last 5 sessions, we were up, and then we get the tariffs. And I want to go into that chart because that tells you about the pattern that we had over the last 3 weeks. We go up, then correction. We go up, correction. We go up, correction. We are not making new highs. Okay, so those are lower highs. So if you think about dodgy technical analysis, this is not great news. And what we saw on Mondays and Tuesdays, as I said, is retail traders massively buying the market through ETF, through options. We are talking like 2-3 billion, and standard deviation 2 to 3 times above. So in terms of volume, that is something that we last saw in 2020. But that tells you as well that maybe that retail is going all in, and we are close to the end. So that's for the retail buying. As always, we did have a bit of macro. So we had ISM services and the ISM manufacturing. Services was a bit lower than the expectations. In terms of sectors, they did pretty okay, but manufacturing is now coming into positive territory, both for the US and the rest of the world. So we're starting to see some positive light from manufacturing. NFPs, that was on Friday. Yesterday, we created 143,000 jobs, which is, it is the 150 average, but the average is coming lower. So not much of a problem so far. And finally, as I said, tariffs from Trump, the headline coming. And the funny thing, most of those headlines will be coming on Friday, just before the close. And if you think about Friday, this is the weekly options. So this is the weekly expiry for options. Normally, we used to have very strong Fridays because, retail traders were pushing stocks and buying those short-dated, the 0-day to expiry options on Friday was working very well. But over the last 2 to 3 sessions on Friday, it didn't work. So a bit of a change in the pattern. Finally, we are still into the earnings season. And I think this chart from Barclays explains a lot, where we look at the EPS surprises and price returns since 2010. So here, this is for your winners for this quarter. As you can see, versus the other winners, they have been moving more or less the same. But when a company over the last few weeks has been missing its earnings, meaning that their earnings, their sales have been lower than expected, the stock has been literally destroyed. And I can give you plenty of examples. I can give you Elf yesterday. I can give you Bill yesterday. We've seen some really big moves on the way down. But as well, what you have is, as always, be looking at the options and how the options are telling you about the move. So if you look on the other way above, you look at Palantir. Palantir, which will be here, has been doing very well after the earnings, and that has been a winner. If you look at Meta, Facebook, up 15%, 15 sessions in a row. So what you have is you get more and more concentrations into very few names due to those retail traders with calls. But when the stock gets destroyed, it gets destroyed like there is no tomorrow. So what about the catalyst going forward? As always, we're going to have some macro. So this week we are halfway to the month. This is the biggest week for macro. We get the CPI, we get the PPI, we get the retail sales. So inflation and how the US consumer. If you look about how the retail ETF has been doing, it is down on the year. So there are some question mark about the retail sales. Why? Because tariffs, and there are some questions for the US consumer. Yesterday we had a big inflation number from University of Michigan, where most respondents were expecting, inflation to go much higher in the near future. As well, what we do have like earnings. As always, we get tons of earnings. We get McDonald's, Shopify, we get Reddit, which has been a darling lady for this market. We get Coinbase, Moderna. So still many names, not the big names like the FANG. If you look at the FANG for NVIDIA, it's going to be in 2 or 3 weeks. But interestingly, what we saw as well from the earnings from the FANG is most of the names reacted badly on the day except Meta. So Google was down big. Apple opened well, but then, collapsed after. If you look at Amazon, was down 3%. So again, the leaders have been struggling. So we have some macro. We have Powell talking on Wednesday, and that will be for the FOMC, for the Fed, what is happening going forward. We have tons of bond supply coming. We are talking Tuesday, Wednesday, and Thursday. So overall, we are talking, more than 100 billion coming into the market. And I'm interested into, obviously, the next trade. So the next trade is by how much the market is expected to move, 1.5%. So it's the same as before. But, one of the themes that has been pushing the market in Europe and in the US is the end of the war in Ukraine. And here I'm using the not the seasonality here. This is the another index basket, a basket of stocks that has been created by Barclays for European stocks. Okay, so those are the different names. Look at those names, and as you can see, on average, those stocks over the last 5 days have been up 4.2% versus the Euro stocks or the Stock 600 by 1%, 10.7% versus 7.3%. So outperforming by a lot. Why? Because the market is pushing very hard in Europe and thinking that we're going to have very soon the end of the war in Ukraine. So this is for UID generation. Funny enough, there was a same index that was created by Goldman, but as always, Goldman, was underperforming the overall market and the overall index, as if, they got this ability to make their clients losing money. And what I'm trying to say here is, for UID generation, I think the Ukraine story has been priced in quite a lot now, and I'm not sure that there is a lot of upside, but it's more like, you know, for you, what we call alpha generation, when you go long a stock and short the index, and where you can make this difference of performance. And here, this is really a good tell about how to be making money. So, and this is it for me for this week. As I said, next Saturday, we're going to have this webinar about options. We just started our Discord community beyond the paywall, so that is $74.99 per month. You will have access to 30 channels, you will have access to the mentors, you will have access to other traders, to the data, to ID generation, to some professional research. So a lot of things that are really, really interesting. We are building it. We're going to make it better in 2025. So any question, you send me an email at greg@Dupont Trading regarding 4x4 video series and or the mentoring. This is it for me for this week. Have a good trading week. Bye-bye.